Achieving double-digit returns sends overzealous investors to the far reaches of the earth, but could the answer be hiding in Middle America? Real estate investor and international finance expert Joseph Smallman joins me in the studio. So we know investors, as I said, they are running to New York, LA. I mean, the list of high-end cities just doesn't end. But how are you going to get them to shift their focus to Middle America?
We already have. We close 3.7 transactions every hour. So we're already doing it. People are already finding value there. What is happening, there's been this huge influx you've seen in London, LA, and New York, where property cap rates, is the return, just shrinks so much. It's hard to find good value now in those cities. It's getting a very crowded space. So what I'm helping investors do, and I'm doing for myself, is looking outside of the major markets, looking at something more primarily in the Southeast or more small urban markets. I'm looking at a deal right now down in Florida, Destin, Florida. It's a corner of Main and Main, a drugstore selling drugs to elderly people that have average income of $100,000. They're down there retired. I think that's a pretty good investment. It's a 20-year lease, BBB rated corporate guarantee on it, paying about 6.5%. Every year. So there's a lot of good value, just like everything else. You have to know where to look.
Everyone's chasing those double-digit yields. What are they seeing? What is the market cap rate in some of those secondary, tertiary real estate sectors you speak of?
If you look in certain areas, you can still very much achieve 15, 20% leveraged returns without too much leverage. Recently just closed a multi-tenant office down in Huntsville, Alabama, and they're the drone experts. So I don't think drones are going to go away anytime soon. And we're able to achieve a 16% cash-on-cash return with that. Another place that's really not a cocktail bragging place, but a lot of people are making good money, is manufactured homes. If you leverage and invest into those right manufactured home parks. This is where the person actually buys a home and they rent a pad from you, so it's very low maintenance for the investor. With proper structures with that, you can get 20, 25%. Most people don't want to live in a mobile home park, but everybody needs a place to live. And we're seeing that as an alternative to affordable housing in the U.S. and also the graying America. They aren't too worried if their house lasts 50 years. If they buy a manufactured house, it's good for a good 20, 30 years. They can recap some of their capital of their existing home. They can scale down, and it's a very good investment for them and a good investment for the commercial investor.
In your marketplace, tell me about the profile of the average investor who's attracted in sort of those staid but still steady long-term investment opportunities. Are they Americans? Are we talking about foreigners? Who's talking to you?
We are speaking to a lot of different people. Now our niche, there's the CBRE, which we have a great deal of respect for, that will buy the $100 million buildings. They're fantastic in that sector. The sector that we're involved in is the 1 to 25 million, and we're the largest. We've closed the most transactions in that sector. We're speaking to a plethora of people, be it from people repositioning assets to Chinese money coming in, a lot of Latin American money coming in. We're seeing a big influx from especially emerging markets. It seems like they're running to safe haven and hard assets, and a lot of Chinese.
Hot market, to say the least. It's picking up, isn't it? What do you think the next decade's going to bring?
Oh, my crystal ball turned into a snowball in 2008. I've learned that the paradox of what I've experienced and seen is that the more efficient we become, the more unstable we become. And you know, 8 years ago, if I told you the Dow was going to move 1,000 points, you would go, "You're crazy, Joe. There's no way the Dow will move." If it moves 1,000 points today, people really don't get that upset. They go, "Okay, you know." So we're going to continue to see volatility. We're going to continue to need to reshift assets and we're going to continue to be a global market and more integrated with the technology. I have learned to build your ship to be very sound and solid to manage all the weathers going forward, as opposed to trying to predict the weather and build the ship to fit the weather. I prefer building the portfolio, being the ship to survive all types of storms.